Good morning to you all. Beautiful, beautiful guests today. I am your guest host. You're probably used to seeing Mark, and I am your guest host today for some fun, some market fun. Let's do a little breakdown of what we're seeing happening, some of my views, and we'll get to some trades later. It's going to be lots of fun. We're going to pack the 30 minutes. I might even go over, but let's see what happens here. So let me get into presentation mode so we don't have to waste any time here. We've got a little follow through. It's been a little bit of a buy on the dip kind of market lately. And so I've been doing a few shows and I keep saying we need to see a little bit more of that bearish unwind, right? We kind of had this sort of incredible, very, very sort of extreme downside reaction, probably deservedly so, to what was, hey, Cad, hey, Goss, Flow Money, Metis Trader, Matt, Man, Rick, everybody's here. Barry, Chuck, Terry, Clarence, Enzo, good to see you. Snapper, Vicky, of course. Vicky, you can always count on Vicky. She is a very, very good trader, and I'm always happy to see her. We'll talk about my MTI a little bit today, what I'm seeing out here. But I think we could push probably to the highs we saw yesterday. I don't know how much more we have in the tank, but I'm going to show you that the problem is people are still quite bearish, right? So if we look at, here's kind of a good little bit from Goldman here. If you're bearish, you're consensus, right? Let me make sure my mic, can you guys hear me okay? I'm gonna make sure you can hear me okay. Okay, terrific, thank you. So everybody's kind of like, well, with all the things going on in the world with Trump tariffs and confidence falling off a cliff everywhere we seem to look. Okay, thanks, guys. Well, how is this market still rallying? And so I was on a show a few weeks ago and I said, I will never, ever underestimate the market's ability to climb the wall of worry. It's one of my favorite sayings, climbing the wall of worry. The market has done it for 100 years, 150 years. And so our job is to always kind of, try to step back from the noise sometimes and sort of see a slightly bigger picture, depending on your time frame, and kind of go, well, what is the market looking at? So the market at 4,900 is in panic mode. It cannot see, right? Markets always look ahead, but at 4,900, it had existential worries, right? Was Trump just going to let the market collapse, the bond market do what it was doing? And he didn't. So we got that bond put. He stepped in. He delayed tariffs. He did some other things. He said buy stocks. He gave the market confidence, and that took the existential, very, very serious risk off the table, which pulled us back from a 50 VIX, 55, 60 VIX, and brought us back into the realm of, okay, now we've sort of put in a little bit of a bottom. Of course, there's the impact on earnings, et cetera, all these things. But that's going to take some time to play out. But remember, markets react at the margin, right? They sort of reacted to what's right in front of them. Now that we take existential risk off the table, and we know there is somebody, may not be Powell right now, may be, Trump has flinched a number of times. There's somebody who cares. That's all we want. We want somebody who cares. So the market is now able to kind of look past its current conundrum and look to the future. And so the question is going to be, can it look past some of the problems? And let's talk about a couple of those moments. So if you are consensus, look at this. Consensus is bear. All right? Investors have never been this consistently bearish. For 11 straight weeks, 50% of respondents have been negative on the market. What do markets do? We saw the AAII sentiment indicator in the tank. You know what? I've got that here. And I want to show you guys that because that is something that I think is always interesting to look at, right? Sentiment. Why has sentiment fallen off a cliff? Because we were in a state of shock, right? We were in a state of shock. But I've been arguing in various places that some of that is less related to reality and more a paralysis, a shock, a kind of, oh my gosh, what's happening here? This, this new administration is doing the opposite of what was supposed to happen, which was pro stocks, pro growth, pro everything that is good for the stock market. So there was a real shock involved there. And so you can see this double AAII sentiment, the bull sentiment, starting to come off the mat. But look, it's still pretty low, right? So low means people are bearish. High means people are getting a little bit exuberant. And so as the market in the purple here, or magenta, I think that's magenta, if I know my colors correctly, it is bouncing back, and only now is sentiment coming back. So how are you going to look at this? Are you going to say, well, I think sentiment is still poor and we have trouble ahead? Or are you going to say, well, sentiment's still poor. Foreigners have taken money out like we have never seen before. People are super, super negative. We just looked at this unprecedented negative sentiment indicator going back to 1988. How much more data do you want? Over decades, we have never seen people this bearish. So what does that mean? Well, that means we're getting the market that we're seeing, which is kind of inching up. When everybody's negative, when everybody's on one side of the boat, you get the market doing the opposite, right? It's going to go, the market finds the pain point, and the pain point has been up. And then this is getting into the weeds a little bit, but I always like to talk about these systematic strategies. They kind of like they buy when volatility is low, they sell when volatility is high. They are very, very out as well. So a lot of strategies, those sort of big systematic strategies that are out there, CTA, vol targeting strategies, no need to know too much about those, but basically they're out. So that's another source of buying. You've got the corporate buyback window open again, right? So corporations are starting to allocate, and they're probably happy to allocate to buy stock at cheaper prices, right? So we have these sort of bids to the market that are very interesting. Now, it's not all fun and games here. We can see that consumers, there's pressure, right? We've got credit card data showing consumers under pressure. This is showing, I hope you guys can see this. Let me minimize and maximize. The share of accounts making minimum credit card payments is rising. In fact, it is higher than it was, than it's been for 10, 15 years, right? So there's some stress. We know that stress has been around. It doesn't matter that markets went to 6,000. There is stress below at a certain income level. People who don't own assets, right? People don't own stocks and houses haven't been feeling very good about things with inflation where it is. The trade war is having a big impact on the US. So make no mistake, if this continues, then it continues to sort of pervade throughout the economy. And I'm going to show you where in the economy it's going to matter more, but it's going to continue to cause problems. We are seeing prices higher. We can all vouch for that, right? And there's been this real big pull forward. So let me show you, this is my little macro portion. We're going to get to some trades, don't worry. We're going to get into some interesting things here. You can see, what are firms doing in response to higher tariffs? They are passing cost increases through to customers. We saw there was something related to Amazon Day. What's the called? Prime Day. And they were talking about how we can't offer any deals. The costs of our inputs are going up. Tariffs are overhanging. Our reality is that these tariffs are going to push prices up. It's just a matter of fact. It has to. Companies can absorb only so much, but here they are. They're saying we're going to push these through to the customer. And so here's your stagflation number. Oh, I got it cut off a little bit here. So here's your stagflation number. Let's move this over. Stagflation is upon us. We saw Powell talk about it. Yeah, higher prices have been around for a while. And unfortunately, as they were coming down, we did see a compression of prices, right? We even saw shelter prices starting to come down, which can lag. So that sort of was very positive. We started to see those inflation numbers of the last few years really start to come down, and this has thrown a wrench into the problem at this point, right? So you've got pricing going up, you've got growth coming down, but I'm going to tell you a little bit about that. Yeah, I mean, I think there's a little bit of that, Cat. I kind of like that idea. I've been sort of talking about getting out of digital a little bit and into real stuff, right? Because digital is being disrupted in a way that is just not unprecedented. We've been seeing this for decades, but it's. I think people may get to the point, if this market stays difficult, they get to the point where they're going to buy real things again. And we'll talk about Google in a moment. But the problem with high inflation is we've backed the Fed into a corner. So 40% of companies in the Russell 2000 in particular, negative earnings, they need lower rates. So the yields are a problem here. Yields are a problem. Passing and absorbing should be 100%. It is much higher. So we'll see what happens, right? I mean, businesses are going to absorb as much as they can. They don't want their demand to drop off a cliff. But this is sort of the different scenarios we're facing, right? Stagflation is going to be a problem. Rates are going to stay up. S&P is going to go down. It's a very difficult situation for the market. We're far from Goldilocks, which is kind of where the market thought we were in the fall. S&P up, rates kind of sideways to down. Everyone having fun. Everyone enjoying a nice push up. So now the good part is, I'm going to tell you right now, the numbers haven't been that bad, right? We've pulled forward this massive amount of demand, right? We've had this huge demand pulled forward that is going to maybe kind of skew things a little bit, right? So you can see inventory soaring. So we have to kind of look a little more, skeptically at, is that a word, skeptically? We have to be a little bit more skeptical of some of the GDP numbers. We've seen that big drop in GDP, but that's because of a sort of a mathematical function, right? GDP includes exports minus imports. What's happened? Everyone wants to get ahead of the tariffs, so we've brought all these imports in. And that's, now you take out that import surge and GDP is actually 4.5% growth. Stocks are back up, housing hanging in there, as far as we can see. And people are still feeling wealthy. So the wealth effect has kind of come back a little bit. And I've been saying this paralysis and shock. So my view was that, there's shock, which means that can be overcome, right? People can get back to spending money and feeling confident if the environment is okay. And I think it generally is okay for now. But if the tariff woes continue, 10% tariffs, still not great, 20%, there are a lot of deals to be made with 150 countries, 200 countries, and yields are worried. So there is this reality of things aren't great, but the market is at the moment is a little bit more half full, glass half full, right? It is looking to the fall, and the way that I kind of see it is by the fall we're going to see the slowness that has to come because of all this pull forward demand, right? So we're going to see a lull. But that could come at a time where some deals are getting done. Maybe the market starts to look, right? The market's always trying to look at the horizon. At 4,900, it can't see the horizon. It's in panic mode. Now it's kind of going, well, let's toss 2025 out and look to 2026. We're going to get tax, regulatory, AI tailwinds, which are really, really huge. And we'll talk about a couple of ideas here in a moment. Those are going to be positives that could lead the market to believe that any slowness in the economy is transitory, right? So if people are saying, well, watch out, we're going to get that slowness, that's old news. We're going to get it. So this is sort of the state of affairs that we're in right now. And clearly the market is just kind of bid because of these things that I've been talking about. It's not, it isn't in that panic mode anymore. And it's a little bit in the buy the dip mode as we see things come off. So we can see my MTI, we've got some nice yellow developing in the SPY. which is good to see. We haven't seen that in a long time. A nice string of yellow, which is basically, it's very positive. It's a little bit more income trade oriented. It isn't, knock it out of the park like you would have with greens, strong greens, 4s and 5s. So we're in very much in this, I think, a little bit higher premium, a little bit of income trading, but not really getting too convicted to the upside. So I think it's sort of a market where, I think we could get back down into the 530s on SPY, and I would be getting constructive on things at that point. So let's take a look at a couple of ideas, because I know you guys haven't got all day. So a couple of ideas. Now, I'll start with a couple of things. So I really like Hood. We closed a huge win in Turbo Income in Hood. And I'm looking at some other things. We also have a cash machine trade. So in Turbo Income, you get all kinds of income type trades. And we've got a cash machine that's captured about 80% of the premium we sold. So that's really nice. Those tend to be trades where you get a really, really nice cushion, really focusing in on that income portion. So really good for people who are all about just kind of consistent, reliable, repeatable income. Some other trades in Costco. We've been doing some good income trades in a few other names. But Hood's starting to look really good. This is on our long-term list. So in Turbo Income, you get our long-term list. 3 of those names are at all-time highs or just below all-time highs in a difficult market. So that's kind of fun. Yeah, nice. We had a nice win on Hood. We had some good wins on. We had Reddit. We had Uber was a really, really nice trade. So let's take a look at Uber. I think this is still one of my favorite stocks. Sometimes they react very negatively to the earnings, and the earnings could have been a little bit better, but I think they're focusing on this strong network effect, very, very reasonable valuation, I think, given the potential for this thing. So I would look into here and betting on this market to kind of continue to inch up a little bit. I would be looking at maybe playing a little bit of upside. You could do something. Oh, they've blown out the spreads here. So, oh wait, that's a weekly. We don't want to look at weeklies. I think an interesting trade for this. I think you're going to get 42 days if you pick up some June. I think for $1.48, that's an interesting trade. I think this thing could start to make new highs. It's digesting the income report, the earnings report, and it's hard to say how long it's going to do that. So I think that's an interesting one. So I'm going to mark this trade here at $1.49. We're going to monitor that. Another one I like is the Hood. I keep waiting for maybe just a little bit of a bounce back, a little bit of a pullback, so that we can get in here. But it's just very, very strong. It's risen about 10% in the last couple of days. So bit of a tricky one there. Shop's another interesting one. I'm not ready to pull the trigger on that. It's the Canadian sort of, not Amazon, but facilitator of online businesses and things like that. Very, very good stock. Canadians have to buy it, basically. There's such little technology in Canada. It's more about maple syrup. So it's a stock that people, Canadian GoDaddy, that is a solid stock. Good results. I like to see this. I like to see it having broken this trend line up here, but I want to see it act a little better. The MTI is down into the reds here, so I'm not super excited. I wouldn't be afraid to do an income type trade on it. You could do maybe like sell like a June 80 put to buy the 70 put. So you could put that on do a $10 spread for about $1.30. I think that's okay, because those are levels that are going to be roughly around that low that we saw not that long ago. So I think that's kind of a fair trade there. Now, the fun ones I want to talk about, because I know we don't have a ton of time, is I've been kind of negative on Google lately. Oh, the Uber call. Let's take another look. The Uber call was the June 20 expiry. 90 call with a 149 top, $1.49 top. So right now, buck 47. I think that's something, I think it can get back to those old highs. It's a little reluctant in here, but I think we can get to those old highs and maybe push through 90 on that one. Tesla looking really good again. I've added a risk reversal on that one just as we start to break out above these levels. No one knows what Tesla's worth, and that's what I love about it. It is just moonshot city, and that means it can go anywhere. So I've got some trades on that one. It's a little bit expensive, right? So we're not going to do that one. Now, one of my ideas lately is that I am starting to worry about Google. So I've got this little AI pair trade set up. This is what I call my picks and shovels versus deep disruption in AI delivery trade. That's a mouthful. So you've got Google. More and more people are using Chat, GPT, different AIs. I mean, there's, half a dozen of them that people tend to use. And yes, everyone's saying, well, GPT's been around for a couple of years and it's not really disrupting. It's finally happening. Apple came out with some news a couple of days ago. They said it is happening. Safari searches are getting crushed. They're down. Well, not getting crushed, but they're down for the first time in a decade or something like that. And the unfortunate part for Google is, people are getting sick of Google as well. I don't know if you guys everybody uses Google, but there's just so many ads now. It's just really annoying and they're ticking people off. Also, people are shifting to social search. So the one place where I think Google is still okay is kind of your local stuff. Like, oh, where's, give me some pizza places around here. A lot of the younger generation is shifting to social search for similar things. And so can other businesses make up for it? So I did a rundown, and yes, absolutely. I have YouTube. YouTube is one of the best assets in the world. They've got some other stuff. Hardware has no margins. I think they can make up for it if growth is very, very strong in some other areas for them. Right now, AI is not a big thing. And one of the big problems is for them to compete in this new paradigm shift, they have to just keep investing. So they cannot hold back on CapEx. So they're going to spend. Their main high margin business is 57% of revenues, high margin, and this is going to start to erode. I am 100% convinced that we have seen the beginning of a big change. It's finally happening. Now, has Google priced that in at this point? We're down from 200 to 155. Maybe it has priced it in to some extent. But for my calculations, I think it has a fairly good chance of losing about 30 to 40% of its value. Now, the other side of that is NVIDIA. And I've been a little bit lukewarm on NVIDIA lately, but the way things are developing in the AI space is, I was kind of looking at these, what's the demand going to be? I mean, it's every time you hear from Elon, he's like, well, we needed another million GPUs. It is, and so I kind of ran this, and we're looking at a need for about 18 to 25 billion GPUs. This is almost impossible to predict with any kind of accuracy. But I think what we can take away from it is huge. It is huge. If you look at sort of, even they're going to make them smaller and smaller. They're going to be in devices, just like, intelligence came to cell phones as little bits and pieces got smaller. So there's going to be just massive demand. So I think NVIDIA is kind of looking interesting here. And the Google news kind of reinforces that, right? It reinforces the fact that the Googles of the world are being disrupted and they need to buy a lot of this stuff. The NVIDIAs of the world, and in particular NVIDIA, because it's the gold standard, is the beneficiary of that, right? They sell the picks and shovels. They sell the GPUs. Good luck with what you do with them. Good luck trying to monetize that. We are monetizing by selling it, by selling this product. So I think that's kind of an interesting sort of place to look. And I'm going to put on a trade here And let's mark it. So I think Google's in trouble. We see it down a little bit again. I think it's probably got a pretty good chance of heading to 120. I know it's not popular because a lot of people own it. So, I feel bad. I owned it. I sold it after earnings as I sort of started to see the writing on the wall. I could be wrong, like on anything. Now, for this kind of trade, I want to do something. I want to give myself a little bit of time. So what I would do is I would pick up a Google August 120 put at about $1.50. I think that looks kind of interesting. I'm going to make this nice and wide. I'm going to give this some time, August. I don't want to pick something short term. Remember, when we're doing the option harvesting thing, we're going to go a little bit more short term. We want that decay to work for us. When we're long options, we do not want decay to work for us. It's not working for us. So we're going to pick up one of those. And for NVIDIA, which I think is still under some pressure, so I'm a little bit more sure of Google's weakness than I am of NVIDIA's strength. But as we're doing a pair trade here, if you had to pick one of these, I would say the Google is the interesting one to me. But just for fun, let's do a pair trade. I'm going to go out here. I'm going to pick the 150 for about 220. So we're going to do the 150 August 15th expiry on NVIDIA. We're going to buy the 150 call for 220. And we are going to pick up the Google August 15th expiry 120 put for $1.50. And I think that's going to make for an interesting little potentially nice trade, profitable trade. It's going to give us enough time. If you look at what we've seen lately is that, the option pricing has come down quite nicely in a lot of areas. Now in Google, it's kind of hanging in there because there's this overhang of very current worry. Now, NVIDIA, we also have earnings, so we're taking on a little bit of risk there, but I'm betting that the numbers are actually decent given that all the big companies have said we continue to spend. It's GPUs may be somewhat cyclical, but it is like having to spend on hydro at this point. These companies have to compete, and you can see that they are continuing to spend in this area very well. So, okay, so we got those trades, and let's take a quick look. So Turbo Income, everyone, a quick little plug here. We're 6 for 6 in wins. We've got a few trades on right now. We've got some extra trades as well. I always have bonus trades because I can't help it. I'm a degenerate trader, and I'm always looking for opportunity. We've closed a few of those lately for some nice wins. Meta, a couple of other ones. Coin, did a coin trade. So this is a very cool system. It really, really starts. It is a filtration system. We go through things. One of the big things, if any of you know me from anywhere, I love to look at quality, right? I don't want to get involved in things that are too risky, except for maybe a very small portion of the account. We can always have a little bit of fun, right? So, yeah, I agree, Enzo. I think one thing about Google is they're not going to just sit on their hands and let this happen. But the problem is you have a lot of competition now, right? You've gone from having this massively wide moat that looked unassailable for the next 100 years to where you've got something that is now mowing your lawn on a daily basis, and it's starting to show up in the data. They just won't be able to charge what they're charging for ads. They will still do ads on YouTube, and they're still going to follow you around on the internet and stick ads in your face, right? But I think they've been increasing prices lately. So the problem is they are just facing almost from, we know Google for search from an existential standpoint. They are being threatened, not existential, but the revenue is massively concentrated in search. And so, yes, they can have Gemini do what ChatGPT does. Yes, they can have it do what Grok does. But are people going to use it and stare at 17 ads? Or are they going to go over to ChatGPT, which doesn't have any ads? Right? So I get this argument that no, they're not just going to sit there. They've got their own AI, but how do you monetize that? And how do you go from having incredible revenues from its current search to figuring out how to make money from the other search. Maybe, I don't know, maybe it's just kind of like a Netflix model at some point where it's like you get Netflix, you pay for it a little bit, but if you want to downgrade to the ad tier, you pay a little less, right? Or, like and Netflix's ad tier is more profitable than its full service. So that's not a bad thing for Netflix. That's why Netflix is on my long-term list and it's making new highs every week. It's just an incredible stock. So maybe they have these tiers that where you get something and you pay less and you get some ads. I don't know. But the problem is it's a massive amount of uncertainty right now. Now, I will say that they have a developer conference coming up in 2 weeks, I think. And so they're probably going to try to put a positive spin on this, right? So that's why I want to give myself a little bit of time. I want to see how this plays out, and we'll monitor it. I think we're going to try to do a Friday show. I may not do the 10 o'clock show every Friday, but we're going to try to do a show every Friday and just kind of chit chat about markets and stuff. So again, quality in Turbo Income. One of the reasons I look at things with high free cash flow, well, they do better over time. High free cash flow companies do better by 18% a year versus the rest of the market. Is that any good? Right. So these are the kinds of some of the things that we look at in Turbo. We want quality. We want good scans. So we look at a nice filter of what's going on in here. We look at, I'm going to teach you how to basically find fantastic companies, or I'm going to just give them to you, right? That's Turbo Income. I give you the fish, or I can teach you to fish, or you can do both. That's fine too. So we filter down, we get fantastic companies. Then we take a look, make sure that they're acting well in the chart, right? Like I remember, like Lulu. I like the company a lot, but it looked like hell on the chart for like a year. So I can't get involved, right? I need good companies that are acting well, that are giving me stability that I need for income. You're going to get my opinions, whether you like it or not. Here I am talking about a market crash on December 13th before we crashed. And that's what I look at all the time. I'm telling people in our chat room, which you get with Turbo Income, you're in there. And Turbo MTI, here you go, right at 997. The MTI goes to red from super green. It says, get the heck out of Dodge. And we dropped 100 points. Is it going to be perfect every time? No, but this is one of the tools that I really rely on. Look at Tesla. It's plodding along here, and then suddenly it goes super green. And then guess what happens? It breaks out huge. Over here, keeps going, keeps you in the trade, right? So the MTI is something you get with Turbo Income. I don't think we're going to give it away, though, at some point. I think at some point it's going to change. But right now, if you sign up, and I think somebody's going to put it in the chat here, maybe CP, you're going to get that with the service, right? You're going to get, let's see. Thank you, Bruce. I am not fantastic. I just want to give you fantastic value and terrific insights as much as I can, because that's what I do. And many people have 9-to-5s and they can't spend the time that we do at Option Pit studying and understanding everything. And that's what we do for you. So you don't have to do it yourself all the time. So we've got this. Hopefully we can put, oh, you know what? I'm going to put it right in here. If you want to look at Turbo Income, thank you, Enzo. Thank you, everyone, for your kind comments. I think you guys are fantastic. And every time I do a class, right now we're in the middle of a master class series that gets deep into everything that we talk about in Turbo Income, as well as deep into the mind of a complete madman, which is me, a volatility madman. So I put the link. You guys can check it out here. And yeah, I'm always adding new stuff. We've got the cash machine trades. We've been doing flies. We have a meta trade, absolutely destroying it right now. Bringing in all that juicy theta. Anyway, okay, thanks, guys. We've gone long enough. 10:37. Some of you have to get to other classes, other events. Jerry, thank you. Kat, Vol, Paul, I like that handle. Mike of Albion, good to see you again. Flo, I love it. Keep on flowing, Flo. Good stuff. Okay, thanks, Chip. You guys have a great time. Let's watch those trades. Let's see what happens here. Let's see how things develop. I do feel this market's kind of a little bit on the extended side. So a VIX of 20 is starting to be a little bit sort of, floor bottomy for me. So one of the risks in the market when it starts to get really kind of calm, you start to keep adding positions. You're like, oh, hey, this looks good. Oh, that looks good. Hey, this looks, and you start to add too much risk. So be careful, stay on your toes, and hit those singles and doubles. In our account, we grabbed a whole bunch. What do we do here? Just for interest, these are our recent trades. So profit on one contract per trade, $4,700 on a number of different trades, right? So that's one contract per trade. Some of them were higher capital, some were a little bit lower capital, some of them are, $800 in capital, some of them were $1,700. But we did really, really well on some trades, and we're 6 for 6. So come check us out. And have a fantastic day, a fantastic weekend. And for turbo incomers, for new people, we've been getting a bunch of new people lately. We will see you there on Monday, as well as all the other members. And for anybody interested, jump in so you can grab all the turbo income fun. As I like to say it, just turbo it. I had this cool logo with like a Nike swoosh, and it says just turbo it, but I can't find it. Okay, take care, guys.